This is Adam Olsen, Embark's Accounting Advisory National Practice Leader, and you're listening to Accounting Matters. We're coming at you with some bonus episode content, recapping some of the highlights from this year's AICPA conference on current SEC and PCAOB development. There was a lot covered over 3 days earlier this month in our nation's capital, where we were able to hear from regulators, standard setters, practitioners, and preparers on a variety of topics. We've got a 6-part series that we're going to dive into some of those areas and share not only what we heard, but also some key reminders as companies think about their upcoming year-end reporting and leading into the next year in 2023. I'm joined today by one of our recurring guests to the podcast, Nicole Harger, who's a Senior Director in our National Quality Group. Nicole, welcome back.
Hi, thanks for having me.
Yeah, it's great to see you, as always. And I know we're here today to talk specifically about kind of the first part or the first episode in our series, which is centered around quality financial reporting, especially given the economic uncertainty that we have ongoing throughout the year and likely leading into next year. But before we dive specifically into that topic, Nicole, maybe just I know you were there in attendance with myself and some other folks from Embark, but just kind of what were your overall thoughts on the conference from your perspective?
Yeah, so this was actually my first time ever attending. So going into it, I didn't really know what to expect. I thought it was very well organized. They touched on all of the hot topics that, that people are thinking about, that are in the news, crypto assets, current state of the economy. And we had a great time. We learned a lot, and we're ready to share that information with you guys.
Awesome. Well, let's go ahead and then pivot to what we want to talk about today, which was, like I said, it's around just the overall need for quality financial reporting, especially given some of the economic uncertainty. And really right out the gate, the conference opened up with really focusing on this issue, and that is around that quality of financial reporting. So day one, we had a lot of opening remarks from Paul Munter, who's the acting chief accountant of the SEC. And he really, stressed his message around increased transparency in financial reporting and making sure that preparers are really providing that decision useful information for investors and users of the financial statements. One thing, Nicole, I thought was interesting, and it was a phrase he used that stood out to me, and I don't remember if you recall this or not, but he was talking about accounting, and it was basically saying that accounting is more or less like storytelling in a way, and it's really viewed as the language of business. And we use accounting more or less to tell, investors the story of the business and what's, ultimately going to be meaningful to them and understandable to them. And so, really, as people think about their year-end reporting, it's really making sure that we're being transparent in the way we're using that language of business in our financial statements. So,
I thought that was a great analogy, and something that, I had never really thought about it from that perspective.
It was a neat way to, to characterize what, traditionally I think people think about accounting, but, definitely holds a lot of truth there when you think about, the information that's included in financial statements, and even for registrants too. We're speaking about SEC registrants specifically, even like information outside the financial statements in their MD&A and other areas of their filings. I think a few other things that stood out to me in some of Mr. Munter's kind of opening remarks. He obviously touched on the current environment that we're, I think every business, every person is frankly aware of, around just rising inflation, which leads to rising interest rates. They touched on supply chain disruption. You've got labor shortages in different areas of the world, geopolitical uncertainties. There was discussion obviously around the Russia-Ukraine conflicts, and even so, just kind of, segueing from they spoke about the conference just 2 years ago, which was remote, obviously due to the COVID-19 pandemic. And just as soon as everyone kind of felt like we were getting past that COVID-19 hurdle and all the pain felt from that, you've got all of these other factors coming into play at the same time, creating just a little bit more panic and uncertainty. And so, I think one thing he was definitely stressing as well was around that companies need to make sure that when they're thinking about, particularly accounting estimates or judgments that may be impacted by any of these factors, is to really take a good hard look at that and really be transparent about, any key judgments that are being made, as well as the estimation uncertainty in general. And I heard a lot of people too, just talking with folks kind of in between the sessions and stuff like that around just the overall current environment and what that means for year-end reporting. And I think, I heard from numerous people, like just the emphasis that they were going to be applying to their financial statements this year is particularly in their disclosures, recognizing that, what they disclose this year is probably even more important than it's been in years past, and that really they need to make sure that they're not just doing, boilerplate kind of routine copy paste from last year disclosures, but actually providing some more of that meaningful information.
Yep, definitely.
And I guess like the only other thing I would probably add from my own personal views is that, I do think it's prudent that companies revisit their disclosures, particularly, registrants, when they think about maybe some of the risk disclosures they've included in the past. I think a lot of people had disclosures related to COVID, and I know there was a lot of guidance put out around disclosures related to COVID and the risks around COVID. But, just thinking about all of the additional risks and things that are ongoing today, and making sure that if you had very generic language in your disclosures, just to revisit those, and instead of thinking very like generically about what those risks are, maybe think about if they are direct impacts or there are things you're seeing, is that you're framing those disclosures a little bit differently than maybe you had done in the past, and really giving more light to like how the current events are impacting some of those risks. One other thing, Nicole, I thought was interesting was just, and like I said, it really does center around this concept of transparency that Mr. Munter was really driving from the onset of his speech, was around disaggregation. And I know we're going to be having another episode later in the series talking about how the FASB is like focusing on some of the disaggregation. But, Mr. Munter was also, very pointed around saying that, investors are wanting to see more disaggregation within the financial statements. They want more information. They want more meaningful information than what maybe they're currently getting. And so there is a larger focus on providing, disaggregated financial information. And I thought one thing that was interesting from my end was around, Paul was saying that you don't necessarily have to wait to wait for a rule necessarily to provide like more meaningful financial information.
Right.
There's obviously, there's parameters around certain non-GAAP measures, obviously for SEC registrants, that you definitely want to keep in mind. But so long as you're within the boundaries of that, like providing more disaggregation in your financial statements voluntarily, is permitted. And, I think that's one thing he was trying to emphasize, is that, people should think about disaggregation where it might be more useful for their investors to have that. So I thought that was an important point to see, because I do think a lot of times, sometimes people wait for, rule makers, whether it's the SEC, providing some, changes to Regulation FX over the FASB, through a new standard or something that would require different presentations. They kind of are on a sit and wait scenario. But if, there's nothing technically preventing you sometimes from providing some of that more disaggregation. So I thought those were pretty, interesting points there. Did you have anything else that kind of stood out to you on disaggregation?
Yeah, so one thing, he also noted is that investors have asked for more information about cash collected from customers and cash paid to employees and cash paid to suppliers, just for example. So, he did encourage preparers to consider disclosing information they would provide under the direct method, even if they don't actually use the direct method on the face of their financial statements for their cash flows, just as they're kind of thinking about year-end reporting. Again, just kind of touching on more information. Investors wanting more and more information given these uncertain times.
Yeah, I thought that was interesting too, because he's basically saying, hey, I know 99.9% of you guys use the indirect method for cash flows, which is true. I don't think I've ever seen anyone use a direct cash flow method, even though it is prescribed in GAAP, but you can do that. And like like you said, it's often viewed as providing more pointed information using the direct method. But even if you choose to use the indirect, maybe consider voluntarily providing some of those direct cash flow disclosures, just to be like, again, it all centers back to transparency and just being more responsive to what investors are wanting and needing. So,
Yep.
So that was day one, and like I said, I felt like this theme around quality financial reporting, transparency, it kind of like weaved its way throughout the conference. And then I know on the final day, in day three, they had a panel as well that really was kind of revisiting this topic. And they had different partners from a variety of accounting firms up there, kind of just sharing kind of key reminders around specific accounting and reporting topics, and where economic uncertainty, all the risks that we kind of highlighted, just things for registrants or preparers to keep in mind as they're looking at kind of their year-end reporting. We actually, it was interesting listening to them discuss a lot of this, because we had just recently put out a podcast. I think it had just been released maybe a week or so prior to the conference itself. And so it definitely touched on, a lot of what they were saying and maybe more. So definitely would encourage people to check that out if you haven't had a listen and want to hear a little bit more about some of those impacts. But maybe Nicole, from your end, you can kind of walk through what that panel group, highlighted as just some things to keep in mind as people are, thinking about their year-end reporting.
Yeah, absolutely. So obviously one of the first topics they talked about was impairment. So as you're thinking about your impairment assessments for year end, and whether you're doing a qualitative or quantitative assessment, and various triggering events. So, if given the economic uncertainty, if you've had a prolonged decrease in stock price, like, is that indicative of a triggering event? Another thing they touched on was cost of inflation. So if you have increases in cost of obtaining your products or other inputs, is this being passed on to your customers, and how does that impact the demand for your product? The next thing they talked about was financial projections. So your projections going into your discounted cash flows and other fair value calculations. Given the high interest rate environment that we are in, how does that manifest itself into a higher discount rate that may be used in your fair value calculations? They also touched on, timing of the annual impairment test. So, they used an example. I think if you do your annual goodwill impairment test as of October 1st, you don't want to ignore facts and circumstances that occur after that date that would give rise, for you to have to perform another quantitative test at year end. They also reminded people or everybody about the order of your impairment assessment. So before you just jump into goodwill impairment, you have to think about your non-financial assets. So your AR, your inventory, and then you move into your indefinite lived intangible assets, your long-lived assets. You take those impairments and then you assess your goodwill. We talked a little bit about discount rates. So your interest rates, and thinking about, your discounted cash flow is obviously a very popular way to determine fair value. So when you're thinking about the discount rate, what to use, I think they use an analogy of, a layered cake, right? So you can start with your risk-free federal funds rate. You take into account your credit risk. So maybe, do you have a deterioration of credit risk to consider? And then lastly, you think about your entity specific premiums. So how risky are your cash flows, as they may not be as predictable in this current environment?
No, like I said, there are a lot of good analogies, and that's definitely another one that stood out to me was the layered cake approach to thinking about your discount rate. What about, like, I know there was talks around to just like amending contracts, renegotiation of contracts, just in light of the economic circumstances? What were some of the reminders that you recall from that perspective?
Yeah, so there were kind of two different areas where they touched on modification of contracts. The first was really focused on your revenue contract. So, you are required to reassess probability of collecting consideration that you are entitled to if a significant change has occurred. As a key reminder, collectability is assessed by contract. And one thing they did point out that management should be thinking about, typically your MSAs are not really considered a contract. It's your MSA and your purchase order. So if you entered into an MSA, 3 years ago, whatever credit rating you ran in those years prior may not be applicable for today. So you do want to make sure that you're thinking about collectability from your customers and the probability of collecting what you're entitled to. And obviously that does take into account your price concessions. And then the other area of contract modifications they touched on was stock compensation. So obviously, the idea around stock comp is to incentivize your employees. So if you have certain performance metrics that a company is not, anticipating to meet, and their management is thinking about amending those contracts to maybe potentially lower some targets, like thinking about the implications of that modification or even termination of the contract. And you have to think about your the 4 modification types with stock comp. So your probable, it's improbable, et cetera.
Yeah, no, I think those are all good reminders and good things to keep in mind. And like I said, we walked through a lot of these considerations in our previous episode of Accounting Matters. So definitely would remind people, check that out to hear a bit more about these 3 items, and then many other considerations, going concerns, other things that tend to come to mind, liquidity considerations, as you think about economic uncertainty. So well, I think that's a good recap on just kind of the general thing here around quality of financial reporting. Again, like I said, it was weaved throughout that there's just a heightened need to make sure that what we're producing, and I say we, like very universally, as preparers or consultants helping our preparers that are producing financial statements, is just to make sure that we're being transparent, we're giving decision-making useful information that's relevant and timely to investors, because that's really where the appetite is and that's what they need. And so I think we'll leave it there for today. And so, Nicole, I want to thank you for kind of sharing your thoughts there, and welcome our listeners back for part 2 of the series, where we're going to touch a bit on more specifically what the SEC was, including as kind of key reminders and where some of their priorities lie, comment letter trends, et cetera, that we heard through the conference and in our second part of this series. So encourage everyone to come back and listen to that. And Nicole, thanks again for joining me. And
Thanks for having me.
yeah, of course, we'll welcome our listeners back on another episode of Accounting Matters.